Hello there, I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to bring you the market report for the month of June. There's some interesting stories that are developing in the June market data, and I think they're stories worth following as we make our way now into the second half of 2021. The first interesting story is that the market continues to moderate after the very, very high numbers and prices that were achieved in the month of March. It has moderated every month since then, and June was no exception. It came down. Total number of sales in June were 11,106. We had over 15,000 sales in March, so every month we've seen a decline. And it's not surprising. Those stratospheric numbers that were achieved in March just couldn't be sustained. And so, as I said, every month they've come down, and they came down again in the month of June compared to the month of May. But having said that, June's results at a little over 11,000 properties sold were still the second best results ever achieved in the history of record keeping, only outnumbered by the results achieved in June of 2016. So we are seeing a moderation, but having said that, the market still remains very, very strong. I think you'll see more of a moderation in terms of the number of sales in the month of July. And I guess that sort of brings us to the second story, which is we're seeing a moderation in prices as well as a moderation in the number of sales. And I think that moderation in prices will become more evident in the month of July than it even was in the month of June. I mean, our average sale price in June came in at almost $1,100,000, $1,089,000 to be exact. But I think it's hit a kind of a break point at that. Again, those are lofty numbers, and that includes all condominium apartments that sold. And the average sale price for condominium apartments was around $700,000, a little higher in the central core of Toronto. So even with the drag of condominium apartment sale numbers, still almost $1,100,000. But I think we've reached a plateau there, and we're going to see some moderation. And I'm sure when I'm doing the market report next month, you will see that the market has come off in terms of average sale price. Having said that, still very strong average sale price. And why is the average sale price moderating? What's the story in that regard? Well, one, we're getting into a seasonal period, and historically, when we get to July, we see prices moderate as people get into seasonal activities. Secondly, the restrictions are coming off, and people will be engaging in other activities that they haven't been able to, getting their minds off real estate. And thirdly, just the sustainability of those very high numbers may be difficult, especially with the stress tests that have come in and the talk of a potential increase in mortgage rates as a result of some of the inflation numbers that we've seen. Third story is the differentiation between the 416 City of Toronto and the 905. We're seeing price acceleration in the 905 exceeding price acceleration in the 416. And the reason for that is quite obvious. Price points in the 905 region continue to be lower than in the city itself. So there's a gravitation of buyers heading to marketplaces that they can afford. So for example, we see in the month of June, average sale prices for detached properties in the 905 up almost 30%, semi-detached properties almost 22%, and even condominium apartments up almost 16%. Those numbers didn't happen in the 416. Yes, there was price appreciation, but not nearly as high as that. I suspect that will continue for a little bit longer, particularly as people get used to the restrictions coming down, feeling a little bit more safe, and then making their way back into the city. I think you'll then see that price appreciation soften in the 905. Fourthly, and the last story that seems to be unfolding in the June data, and it's not a new story, but it's one that is of concern, and that's the supply. We really don't have enough supply, and it's really becoming critical. Particularly critical in light of the fact that restrictions are coming off, especially travel restrictions. Because when the travel restrictions come off, students, immigrants are going to be making their way into the GTA. They're going to be making their way in huge numbers. In fact, the federal government anticipates that for all of Canada in 2023, we may see more than 1 million people immigrating to Canada. A lot of those people are going to make it to the GTA, putting even more stress on the supply. So as we head to July, for example, we're even with the number of listings that we had last year as we were going into the month of July. So those are the 4 stories that are unfolding in the June data. I really look forward to July's data because I think we'll see a continuation of those stories. The one that's particularly troubling, of course, though, is the supply side. It'd be great if we could get more supply. Great if government could become involved on the supply side to accelerate that. Not likely that it's going to happen because we haven't seen any movement in that regard. But those are the 4 stories, and I really look forward to bringing those stories to you next month when we get the July data. Until then, you can get a little bit more information about the market on our website in my market report, which is on our blog. So until next month, thank you very much.